enjoy great depreciation benefits.
Okay, we're still down and 200 points. That is 16,300 is where we are at. Rima is here with us. We were talking about Vodafone Idea when we had that issue. Rima, tell us more.
Thanks so much for that. So first the news, Vodafone Idea promoters have agreed to infuse 4,500 crores into the company at a price of 13.3 rupees. That's 13 rupees 30 paise. Now Vodafone Idea has two promoters. One is Vodafone PLC, the UK telecom operator, which will be infusing 3,375 crores. And the second is the Indian arm, that's Aditya Birla Group, which will put in 1,125 crores. The board has also taken an enabling resolution to raise an additional 10,000 crores via an equity as well as debt combination. Now, what the street fears is that this fundraise is a good step, especially the promoter infusion, but it is not enough because most of this current fundraise from the promoters of 4,500 crore will go to repay Vodafone Idea's outstanding receivables to Indus Towers. So what Vodafone Idea will be left with, according to IFL, will just be 1,000, 2,000 crores. Nomura says it could be even 2,500 crore, but it is not enough. And yes, they have an approval to raise an additional 10,000 crore, but we know the company has struggled in the past to raise that money, especially from external investors. So according to analysts, this fundraise is not going to be enough, which is why the stock is under pressure. For Indus Towers, the good news is that this increased cash flow, this money from Vodafone Idea will help the company pay out dividends. So the dividends are expected on an annual basis at 16 to 18 rupees per share this time around. But on the flip side, there is also an overhang of the stake sale in Indus Towers because Vodafone PLC is raising money by selling its stake in Indus Towers. So that will put pressure on Indus Towers.
Okay, all right. Thanks a lot for that, Rima. By the way, we had some chip shortage news that was flashing for you on the screen. And just take a look at the auto index. All the top losers in this are on the Nifty itself are all automakers. So the auto index moves to the low point of the day. Tata Motors in particular is getting a hard knock. And if you pull up the futures plate, just take a look at the total open interest build up out there. I think it's gone to around 7.5 crore shares in terms of open interest. That's telling you there's a massive open interest build up that's much higher than what we normally see. So that's point number one. The other factor is just pull up GAIL. We had news that was flashing on the screen. They're going to be considering a dividend. And if you're looking at the futures plate and you're looking at GAIL's cash market rate, well, it's factoring in close to around 3 to around 3.5 rupees of dividend. So just keep that as well on your radar, 4.5 rupees or thereabouts. Well, Prakash, any view on some of these auto names? Some of them have seen a sharp correction. I remember Tata Motors at 520 rupees not too long ago. You're getting it closer to around 400 rupees. Your view on the stock?
So Nigel, I think a majority of the froth related to this whole EV rollout seems to be getting out of the way, which is good because you finally have to see just because they have started selling more vehicles than the previous month or the previous quarter doesn't mean that they've reached scale or will reach scale. Because simultaneously you need a lot of the other elements of the ecosystem to get in place. We keep on feeling there's an unfair advantage that Tata Motors has on the EV cycle because they also have group companies which are into the infrastructure, which is likely to be responsible for recharging for the electric charging backbone and all. But I think it's just too far-fetched. You need to look at hardcore sales at the moment in the next quarter, in the next 1 year. And from that perspective, the only company that could probably ride this entire crisis in a way that's decent is Maruti. So I would put my money into that for the simple reason that the semiconductor shortage will impact everybody systematically. It's not something that's an aberration for just one business. And as and when that improves, you'll probably start seeing all of this restocking, reselling, this revenge buying of sorts to help them. So you're getting companies, businesses at lower valuations because they are going through a trough. Once that's over, you'll probably see that very sharp recovery of sorts in the business and the prices as well. So I believe it's a good time to add to autos. They're here to stay. It's not going away. It's just that it's difficult to time it to perfection. But I would believe any dip related to this news flow is a buying opportunity.
Prakash, we'll thank you on that note today. Thanks a lot for joining us. Have a good weekend. And of course, we'll talk to you next week.